In 1929, as the Roaring Twenties peaked, Joseph Kennedy, yes, the father of JFK, spotted the bubble. He sold everything, went to cash, bought gold, and bet on volatility. When the Dow plunged 89%, he turned millions into $50 million, while the world lost everything. Fast forward to 1987, Paul Tudor Jones saw the same setup. Overvalued stocks, skyrocketing margin debt. He executed the exact three trades: cash, gold, volatility. On Black Monday, October 19th, when the market cratered 22.6% in one day, Jones pocketed $100 million in a single day. 2008? Michael Burry, John Paulson, and others did it again. Cash to protect, gold for preservation, credit default swaps for profits. Paulson alone made $4 billion personally as the system imploded. And now, in late 2025, it's repeating. Warren Buffett sits on a record $382 billion in cash. Ray Dalio calls gold the safest money and urges 10 to 15% portfolio allocation. Hedge funds are loading up on put options and VIX calls. Not 2 trades. Not 5, exactly 3. The same ones that worked before every crash in the last century. This isn't coincidence or luck. Crashes follow a mechanical pattern. Extreme valuations, max leverage a trigger, forced selling, panic. Smart money responds with these 3 trades every time. Trade 1. Convert to cash. Exit before the fall, 12 to 18 months early. Trade 2. Accumulate gold. Preserve wealth amid money printing. Trade 3. Bet on volatility. Profit from the chaos. Together they protect, preserve, and pay off. Then comes the 4th. Buy the bottom. Let me prove it with history, then show why it's flashing red now. Trade 1. Cash. The recognition phase markets hit euphoria. No buyers left, leverage everywhere. Smart money exits. 1929. Kennedy, a master speculator, saw margin debt at 90% of stock values. Summer 1929, he methodically sold stocks. By September, mostly cash. Dow peaked Sep 3 at 381. Crash hit October 24th. He preserved capital. 1987. Jones warned clients in memos. Crash by October. August-September, he raised cash. Dow topped October 2nd at 2,722. Black Monday. 17 days later. 2008. Burry cashed out in 2005 after subprime research. Paulson launched a short fund in 2006. Buffett's Berkshire cash ballooned from $40 billion to $60 billion plus by 2007. Peak, October 2007. 2025. Buffett's $382 billion cash pile, largest ever, 1/3 of market cap. He sold $24 billion plus in stocks YTD, slashing Apple by more, dumping Bank of America. Insider selling surges, highest since 2007 in key sectors. Bezos, Zuckerberg cashing out billions. They're out. Trade 1 complete. Trade 2. Gold. The preservation phase cash erodes in crises via inflation and devaluation. Gold holds purchasing power for 5,000 years. 1929. Bernard Baruch sold stocks. Bought physical gold. Post-crash, Roosevelt revalued gold from $20.67 to $35 Oz to 69% gain. Baruch richer amid depression. 1987. Gold $300 Oz pre-crash. Spiked to $475 during panic to 58% pop. Jones held gold alongside cash. 2008. Gold $600 Oz in 2007. As Fed printed trillions, it hit $1,900 by 2011. Paulson poured short profits into gold, tripling money. 2025. Gold at record $4,100 plus per ounce. Central banks bought 1,000 plus tons year 2022 to 2024. On pace for 750 to 900 tons in 2025, 4th straight record. Poland, Kazakhstan, China leading. Dalio, gold is safest money, overweight now. Druckenmiller, Jones echoing. With $35 trillion plus U.S. debt, devaluation looms. Gold to 5,000 美元到 6,000 post-crash. Trade 3. Volatility. The profit phase instruments that explode in crashes. Shorts, puts, CDS, VIX calls. 1929. Kennedy shorted stocks late summer. Crash. 30% in days. Covered for $15.50 profit. 1987. Jones bought put options on index futures. Premiums cost millions but October 19th payout. $100 million in hours. Fund plus 62% that month. 2008. Burry Paulson bought CDS on subprime. Paid 2 to 4% annual premiums for years. Payouts. Burry $700 million plus. Paulson $15 billion plus funds $4 billion personal. 2025. CDS on commercial real estate spiking. $957 billion loans maturing at 3% rates. Now refinance at 7 to 8%. Offices 40% plus vacant. Defaults coming. Put-call ratios elevated on S&P Nasdaq, institutions hedging. Massive VIX call buys for 2025 to 2026 expirations. Ackman signals hedges like his $27 million to $2.6 billion trade. Why these trades? Crash Mechanics 1. Bubble. Valuations disconnect. Today. Buffett indicator 190% plus. Stocks 2x GDP. 2. Euphoria. AI changes everything. Like 1929 Shoeshine Boys, 2008 Housing Never Falls. 3. Leverage. Margin debt records. Portfolio insurance then. Derivatives now. 4. Trigger. CRE defaults. Geopolitics. Tech bust. Doesn't matter. 5. Liquidation. Margin calls cascade. 20 to 30% drops in weeks. 6. Panic. VIX 60 plus. 50% plus total fall. Cash. No forced sales. Gold. Beats printing. Volatility. Pays 5 to 10x. Where are we? Late stage positioning trade 1. Done. Record cash. Selling. Trade 2. Accelerating. Gold $4,100. CB buying. Trade 3. Building. CDS puts VIX active. Timeline. 6 to 18 months to crash. Late 2025 or H1 2026. S&P from 6,700 to 3,500. Unemployment 4% to 9 to 10%. Then trade 4. Buy bottom. Kennedy post 1929. Buffett's 2008. Goldman $5 billion Ackman 2020. Your action plan, simplified for you, can't do institutional CDS? No problem. Trade 1. Trim stocks 20 to 30%. Hold cash T-bills, miss upside, gain dry powder. Trade 2. 5 to 10% in physical gold ETFs, GLDIAU. Surge coming. Trade 3. Buy SPY puts, 6 to 12 MO expiration, 10 to 20% OTM, 1 to 3% portfolio cost. Insurance to 5x plus if crash. Prepare mentally. List buys, MSFT VJNJ PG. When fear max, VIX 50 plus, deploy aggressively. Most hold and lose 50%. You can win. Bottom line pattern, 1929, 1987, 2008, 2025, same trades. Same sequence, same outcome. Buffett's cash. Dalio's gold push. Volatility bets rising. Crash coming. Position now or regret. If this pattern clicks, subscribe. I'll track signals real time. Sales, gold buys, CDS spikes. Know exactly when. Not advice. Pattern recognition. History repeats. The 3 trades are made. Crash imminent. Act while you can.